Testing, testing. We should be okay. Sound is on now. Okay, the headphones didn't connect because then it connected to my phone. I hate when that happens. I have to use two separate headphones for the note. One for the computer, one for the phone. Doesn't matter. Yes, awesome. I'm using the speaker here. I'll mess with the headphones later. If I turn them off, it'll connect. Forget it. Doesn't matter. It is November 1st, 2022 on a Tuesday. I was just having a little monologue about Halloween being over. Hope everyone had fun with their kids and their family, got some candy. Hope you guys enjoyed. Now it's my time to shine, my favorite holiday. Now I get to decorate the house, more Christmas stuff. I know I'm a little early, but I definitely want to put up the tree this weekend, so I don't have to do it later. And then, of course, Thanksgiving. I love Thanksgiving. Thanksgiving is my favorite holiday. Okay, let's go ahead and do it. It is a Tuesday. We are a day before the FOMC, which is the Federal Reserve. We got a couple of things on the docket this morning that we're going to talk about. Let's go ahead and start with the market. Dow futures up 218 points this morning. NASDAQ up 150. S&P up 1% this morning, 39.22. At the highs right now that we were on Friday's peak. So that's nice to see. Russell 2000, I do have IWM calls with the team. Right now, we should be able to get that gap up this morning. Let's see if we should be in the money. We had the 185 calls from last week for Friday expiry. We are now in the money. So again, if you're part of the Discord group, make sure to read the Discord channel. But again, don't wait for us to signal it to you. Just take your money and enjoy. Not a lot of risk on the board. All we had was IWM. I still have my SPY calls, the 395 calls for tomorrow. I had those from last week. So other than that, we caught euro dollar short. We expected the dollar to reverse. Well done, Kevin, for taking a look at that as we talk about the dollar pretty much on a daily basis. So that's where we are this morning, at least with the team. Crude oil up 3% this morning, 89.21. Thank you, dollar. Gasoline futures up 3%, $2.60. Again, all dollar related. Gold futures, same song, same dance, up 1%. Silver up 4%. Copper up 3.45%. Everyone's cheering the weaker dollar. Euro dollar, 99.47. That's up 62 pips as we're about a stone throws away from parity again. 147.09, down 165 pips for the dollar yen. Market likes that. I'm old school. I've traded Forex since 2014. Didn't do as much lately, but I still track the macro, especially the yen. Back in my day, old school way, when the dollar yen fell, that usually meant the market was down. Different time now with the dollar being such a central focus in the macro environment. So things do change, guys. It's not always the same. Get that textbook and throw it out the window at this point. 115.54, 85 pips for the pound dollar. Bitcoin futures are up 0.76%, 20,535, 1597 for Ethereum continuing to run. You know what? I don't really talk about crypto anymore. Let's go ahead and talk about crypto. I want to say it's XBE or XBT, XET. That is the Ethereum dollar cross. Let me go ahead and get a chart together for you guys on the Bloomberg terminal. This is the Thinkorswim platform. If you're new, let's go and take a look at the year to date. Okay, let's go and take a look at Ethereum quickly. So Ethereum, anything special here that we're seeing? Maybe we could draw some trend lines and see what's up. So we'll go to the top here. Up here. Okay, so a little bit of a breakout. There you go. A little bit of a breakout on the daily chart on Ethereum. Would love to see that psychological number of 2,000 being broken before we start talking about any excitement with Ethereum. 25,000 for Bitcoin for me. So again, we're still hovering around 20,000. Let's get to 25 before we start really talking about it. Still dollar cost average. That hasn't changed, obviously. Let's go ahead and start taking a look at the macro this morning. Let's start with S&P futures. Again, we talked about we're now at Friday highs. We are now above the 100-day moving average on the daily. That's great. Our target is still 4106, which is the 200-day. That keeps falling as prices fall. So again, the 200 MA, that is still our target. That gets us around 200 points from where we are. Could the Fed get us there? Probably. Maybe that really depends. I'm going to go over what Bloomberg said, actually what JPM said regarding S&P. In terms of support, 38.42 seems to be a great one. That's your 50 moving average on the daily. A break of that, then you want to short down to 37.47 if you're planning to swing. In terms of here, guys, I do have clear skies until 41.06. really the only thing that I could see in terms of resistance is 39.80. So again, if you're trying to go long here, it's a tough trek because you have the Fed tomorrow. So those premiums will be juiced. I say kind of hold pat. If you're trying to trade AMD today, AMD reports after the bell. I get out before the actual report. Tomorrow being FOMC at 2. I don't expect a lot of movement, at least overnight, in terms of any kind of big headlines. Sure, we'll have some earnings, AMD and such. But in terms of what I would put in risk today, if I want to go ahead and put in risk today, let's say we get a nice move in the market, I would definitely trade it for Friday expiry, give myself a little room, and then try to get out today. And that's pretty much the best thing I could say in terms of trading. If you are planning to hold it, last call needs to be 1:30 p.m. tomorrow, if that's what you're trading. Kind of a tough trek there, so I wouldn't really want to, add too much, let's say, stress. Especially after a very solid October for the team. So again, we want to hold on to our gains. We don't want to go into too much risk. We don't know what the hell the Fed's going to say. I expect 75 basis points. We don't know how dovish or hawkish their tilt. They've been very hawkish. The market seems to be, it's like it's ready for a dovish pivot of some kind. We are not there yet until they say otherwise. 39.80 is our first resistance. Again, support 38.42. Let's go and take a look at TNX yields. TNX, we did fall. We do now have a gap to fill in the upside on the daily. Let's go to the hourly. Let's see here. We're right at the 200 MA. So again, a break of that would really would have us cooking onto the upside in terms of stocks. So be careful for that. A little bit of a bounce. Maybe we sell off a little bit of these gains this morning. I'm going to take IWM first thing this morning. I'll leave a runner for FOMC. Fine. But in terms of everything else, I wouldn't want to jump into any risk first thing in the morning. I'm trying to clean up positions right at 9:30. That's kind of what I want to do. I always want to close at 9:30 in the morning, first thing. I don't want to open anything first thing. It's very tough. I'm not saying that you can never do that. But again, that's one way I kind of see the market. Again, when we're open, I want to go and take profits. When we're closing, if anything, I want to go ahead and open new positions for a possible overnight move. I don't expect, again, anything overnight tomorrow or going into tomorrow, but I do expect maybe a little bit of a pullback or so. TNX kind of bouncing off that 200 MA. We have a gap to fill. Maybe we fill that gap back above 4%. That wouldn't be out of the realm of reality. Today maybe we up 100 points, 200 points in the S&P ahead of the FOMC. I don't expect some ignition short squeeze today of all days, because then I think they'll sell it off tomorrow. So I kind of want it nice and easy today. Then the Fed gets us what we want, and then we get a nice structured buy to the upside. We don't want 1,000-point spikes on the Dow, man. We don't want that. Again, we don't want anything too crazy where, again, we need downside gaps to be filled. Again, structured buying, kind of chill, nice 1% days. I'll take a day like this if we close today ahead of the Fed. If we start igniting 2% today, you better bet your bottom dollar that we're going to probably fade that ahead of the meeting of FOMC. So maybe we sell off today. Maybe they'll fill that gap to the upside on FOMC tomorrow. Again, it's a very big reversal market. That's where we are. Volatility index, again, we filled the gap. I sent that on the blog yesterday, kind of hovering around 25.79. We're going to go to the daily now. Again, we're below the 200-day. That's really great news to see. Not a lot of fear in the market. Is it a place to buy some protection here? No. I think that if you are buying some portfolio protection, I think you're waiting for 23.71 to 24. I think that's where you start maybe buying some VIX protection. Maybe we tap that ahead of the FOMC. You're buying protection for that as we get into a new month. Just keep in mind, seasonality says that November is very strong. We'll take one more look at the 10-year. On a 3-day support level on the 10-year yields. On a 2-year, we still got a little more to go. So again, down today, but would like a little more. The problem is that we now have a gap to fill on TNX, which is your 10-year yield. That may be filled today. So again, just be careful on opening new positions. Let's go over really quickly the Fed tomorrow. We'll do that rather quickly. I sent this on the blog. This is from Bloomberg. I'm going to go ahead and zoom in here. All right, here. This is from the Fed. This is Kolonovich from JPM. That was from the terminal. Here we go. Here's the interesting note from JPM. Trading Desi's dovish Fed could spark a 10% S&P rally. I also retweeted this on Twitter. Feel free to take a look at that at your own time if you want. Analysis offers a wide range of scenarios for Wednesday's trading. So let's go over the scenarios. The scenario is the least likely to materialize, yet the most bullish outcome for equity investors, the team wrote in the clients on Monday. They were talking about the S&P could surge 10% in one day if the central bank's raises interest rates by slower than expected percentage points. So I think JPM, their trading desk is seeing that there is kind of that the gas is out, to say the least, and the match would be the Fed in order to ignite a short squeeze. And again, I've been saying that as well because we're so priced in for Armageddon at this point, where we were. Now we're bounced. 50 basis point hike, that's pretty much the best case scenario. Pretty dovish. With a dovish press conference, I think this is highly unlikely. This is quote from JPM. It is difficult to conceive of a scenario where this outcome occurs given inflation levels and a tight labor market. I agree 100%. I would not hang my hat on the fact that the Fed may bail you out with a 50 basis point hike on your calls. I think that's a foolish game there. Here's the next scenario. 50 basis point hike and a hawkish press conference, an outcome that could stem from a Fed that is increasingly concerned about financial stabilities. S&P up 4 to 5%. I don't think that's likely. 50 basis points, I'd be celebrating with you guys. I'd be popping champagne too. I just don't think it's going to happen. 75 basis point and a dovish press conference. This I see as definitely the most possible. Maybe they follow the role of a Bank of Canada and they don't raise as much, or a Bank of Japan. Different economies, we know, but again, central banks do talk to each other, I would assume. There's the Jackson Hole and everything. And then you have the different meetings that they have in Davos in Switzerland. 75 basis point hike in a dovish press conference, a scenario viewed as the second highest probability. I say the higher probability. If you saw the Fed give explicit guidance for the December meeting, then that is likely viewed as a dovish outcome. So again, pretty much the market is saying we're hoping or we're pricing it in. Two different things. 75 basis point hike and a hawkish press conference. Again, very, very likely. They said the S&P will be down 1 to 5.5%. This is the most likely outcome while retaining the optionality for December and 2023 meetings, emphasizing current risk to inflation and higher. Yeah, I think that's kind of 1A, 1B. I mean, you're going to get 75 is my expectation with, it depends on the tilt. I mean, it's tough to call that because it's perception at the end of the day. The market perceives as something as dovish versus something as hawkish. Two different scenarios. It's really the market. So I would say 75 basis point hike. Depends on how we do today. If we start breaking out higher, guys, today, I don't expect that to continue tomorrow. I think they'll reverse that. Let's say you get us back down to 3,900, 3,863. Completely normal. And that would be kind of on par with the course for a Fed day. So with that being said, again, you kind of have two forces at work here. Are we getting too bullish too quickly? Well, again, we're not overbought as of yet on major timelines. So no, not exactly. But again, be careful. We've had some really nice optimistic days. Usually you get the rug pulled from under you right there. So again, we'll see the price action today. Today should set us up for tomorrow. I'll be watching that very closely on the S&P as well. That's a lot to speak. 15-minute monologue, always fun. Let's answer some questions. I did fix the mute, by the way. Yes. Thoughts on Amazon? 110 calls for a gap fill if Amazon goes above 104. All right, let's go ahead and chart it together. All right, Amazon. Okay, we're above 104 now. Pretty ugly chart on the hourly. Well, nice bounce anyways. Yes, you do have a gap to fill to 110. I would not fill them today. The only way I would fill anything to the upside if it breaks 105. I would want a little more confirmation. I just don't want to run and buy calls right at the open, especially since we're above that 104 level. Let's see 105, give me about 60 more cents or 80 more cents, and then we could see what we can do. But again, we don't want to load the boat on risk as of yet, especially with the FOMC looming. The only counterpoint is that we could get a nice rally today into the Fed, and they'll probably sell it off. So again, you probably want to get out of your calls anyways. But again, 110, that's a heck of a target. You go for this Fridays, you keep a stop right there at 103, 104. Kind of keep it tight. I don't hate it, Jeremy. I don't. But risk management here, I want to see the open. Can you discuss your thoughts on technical analysis and the death cross on SPY? The death cross, we're talking about SPY. I don't know in regards to which chart you're speaking of. But again, I assume the death cross you're talking about is the 50 to the 100. And that crossed back a couple of days ago. Now we have to see if that 50 can cross above. Really, the technical analysis here, again, I do have some fibs open as well. That's right around 390.09. We're above that now. But really the 100-day MA is going to give me everything. But still sticking with the target of 409.96 being the 200 MA on the 200 DMA there as well. But you're absolutely right. Look at that cross from a couple of days ago, a couple of weeks ago. The 50 and the 100. We need that 50 to come back up. If we kind of settle near 400, we should get it back above there. At least in terms of the 20-day, how I trade the 1 hour candles on a 20-day basis, at least we're above that. So again, I still think momentum is still to the upside on SPY. Good morning, Carlos. Thoughts on Uber earnings? I did not check Uber earnings this morning. I did post it. Let's go ahead and see it together. The actual stock itself. Do we have flying taxis yet, right? Isn't that kind of the thing we've been waiting for? All right, nice little bounce here. Again, bounce on risk assets. Check out yesterday. We had the high betas gain. Cannabis stocks soared yesterday. So again, starting to see a little bit of risk adding, maybe some short covering, sure. Not exactly a squeeze, but short covering. Let's read the together. EPS down 61 cents. Negative 17 was the estimate, but the revenues were beats. Q4 guidance, EBITDA 600 to 630 million. Gross booking is up double digits year over year. Wow, here we go. EBITDA better than expected. Wow, good for Uber. Well done. Okay, so let's go ahead and chart Uber. $30. We're now above the 20-day MA. We're breaking out on the hourly. $30. We're going to be above the 200-day. You have a gap to fill here at 30.35. That should fill. You got one more here at 32.74. I think that if you stay, let's say you close above, let's say you get above 31, those 32 calls, that gap fill, maybe you can catch on Uber with a nice short squeeze. But let's go ahead and place an alert together above 31. We have this gap to fill. Let's do it at 30.50. I think 30.50 might give us a little bit of leeway with volume. But again, let's see if we get it. The good news is that those high beta names are moving as well. So again, opportunities. Maybe a inverse head and shoulders, maybe. Let's see, Carlos, thoughts on Apple for this week? I actually spoke about that on the blog. Here's my alert on it. Here's the hourly chart on Apple. Again, same deal with the Fed. 156.76 is my level to break. If we break that, I definitely want to target the 160 strike. If it's 162s, it has to be for next week, but 160 strikes for this week. If we get the break of 156.76, really your point of just cutting off or your stop, I would kind of have it right at the 100-day, 151.38. You're welcome, Jeremy. Thank you. All right, guys, that's it for the day. Have a great rest of your morning. Happy new month. Let's go ahead and make it a great day. FOMC is tomorrow, so we'll be watching the market very closely. Sitting on our hands, I am going to close IWM this morning. We are in the money. But again, we have our alerts. 9:30 at the open, I'm looking to close positions. Let's see that 10 a.m. turn. If Uber does break in the morning, I'm going to wait still for 10 a.m. Let's just keep it at that for now. The VIX did fill its gap. It's kind of holding support right around 25.75-ish. So again, the last thing I want is a reversal, especially when we're holding calls. Doesn't feel good to happen. And it's happened to me many times. Look at the 100-day on the dollar as well, 100 MA. So again, maybe we get a bounce right around 110.70 or 65. And then that's going to reverse this move in the market, at least short term. And again, that's a premium killer. We don't want that. We will see you guys tomorrow. Have a great rest of your day. Cheers.